Hi guys, welcome back to my channel. Thanks for joining me again. Okay, so I had some feedback, like I said in the last video, and I am going to just have a quick run through of Tradingview. Basically, this is the chart software that I use, and I've been asked by quite a lot of people through different chats and whatever, saying like, oh, you know, we like what you do. We want to learn how to do it. Can you show us how you do it? And the easiest way for me to show you is to put some little videos together and let you watch them, basically. So what I'm going to do is I'll try and make this as upbeat as I can for a run through of Tradingview. So obviously go to tradingview.com and register for an account. When you go onto the registration page, you can have a bare basic page, or you can pay for upgrades. So you'll notice on there that you'll have a basic free charting subscription, and then you've got a choice of free paid subscriptions. So I use a premium charting software, and the reason why I use a premium is because I've got quite a few different indicators. I use quite a lot of different alerts. So for me, that subscription is the one that I need for my entry systems and my analysis. But for what I'd suggest for you who is starting out on your trading journey, I would go for the bare basics, and I would have a play. And what you need to do, you can watch all the videos in the world on everything, but you will learn more by doing. If you don't do, you will not learn. So you need to log on, create an account, and once you've opened a subscription, just do the bare basic subscription. Like I said, you'll go on to the landing page of Tradingview, which will have your account in. Click on the chart layout, and then this chart in front of you, or a similar chart like this, normally opens up in black color, will open, and this is what we will see. So basically what I'll do, I'll just have a very quick run through of each individual bit. Okay, so obviously this is the candlestick pattern, following up, pricing down. If you wanted to change your time frame orientation of this chart, you'll notice up here it says 5M, which is 5 minutes. So if you click on here, you can go 1 day. That will be 1 day for the Japanese 225. This is 4 hours. You've got 3 hours, 2 hours, 1 hour. You've got 45, 30, 15, 5, 3 and 1 minute chart. So basically what that means in essence is 1 day, each one of these candles is 1 day. So that is today, that is yesterday, that is the day before, that is the day before that, that is the day before that. So each candle is 1 day. On the candles, obviously you need to have a look at candle sticks and what they mean and how to understand a candlestick. But obviously bare basics of it, you've got the body of the candlestick here, you've got a high wick, and you've got a low wick. Okay, there's lots of different types of candlestick patterns, reversal patterns. There's lots of different types of like you've got hammers, inverted hammers, you've got bullish engulfing candles, you've got bearish engulfing candles. There's a lot, and I will at some point go for a little video and explain what the different candlesticks are. There are plenty of YouTube videos out there to explain what candlesticks are. But yeah, it's interesting to start and looking at sort of rotation of candles, pullbacks. There's quite a lot involved with it, and it's an interesting start basically. So you need to have a look at that. Okay, so obviously on this tab you can choose your different time frame, which is great. The tab to the right hand side, candles, if you click on this, you can then change your layout to what you want. So if you want bars instead of candles, you can change it to the open, high, low, close bars if you want, or you can change them to Heikin-Ashi bars. Again, no worries. For me and my trading, I use candles and I also use bars. Use a little bit of both depending on what I'm trading. What market I'm trading and what setup I'm looking for, basically. So moving on, indicators in Tradingview, they have their own built-in indicators, and they've got community scripts where people make indicators and put them on, and they've also got invite only scripts. So they're my invite only, which I use. My scripts, you can create your own scripts as well. If you can do that, then well done. That would be really good if you can create your own sort of script and entry system. But basically, if you click on search and you want, say, a moving average, if you go moving average, that will put a moving average on. If you want another one, add another one. You want another one, add another one. So if you click on here, this will show you now the 3 moving averages that we want. If you click on settings, you can then change what you want. So in some of the strategies you'll see on here, I normally use a where are we? 8 and 20. Oh, not 920. 8 and 20 moving average. And what I'll also do is, where are we? Why does it do that? 20, so, and I'll put the 200 on as well. So again, that's where you can add take off. If you want to take off an indicator that you don't want, just highlight the one, press the X, it will get rid of it. Okay. Once you've installed a load of indicators, I mean, there's if you listen to something and you think, oh, that indicator looks really good, I'm going to learn about that one, and then come to Tradingview and go, right, I want to put this one on. Say you want to look at an MACD. Great, put it in, it will come up at the bottom and you'll be able to use it. But obviously you need to understand what these things are first before you start using them. That's the key part of it. So again, on here, if you want to change any of the settings, you can go through, update, change the styles. If you like them in a certain way, you can change them into a certain way, which is good. Or if you don't want it and you don't want to click on that, right, if you literally just click, press delete, it will delete. If you want to right click, press remove, it will remove. Okay, so what you can do once you've installed a load of indicators, you can actually go to up here. This is where you can save your charts. So say we want to save. Oh, let's click save, click rename. Let's call this chart 1. So this will now save this as chart 1. So what you can do, moving on to this templates tab, you can save these templates. So if you want to go onto this and you call this oh, hello, I've done that wrong. Template 1, click on save. That will now be in here as template 1. Okay. You can have the templates actually put up in front. So I've got there my 15-minute trading, my 1 hour, my 5-minute futures. I've got quite a few others as well, but I don't put everything on just because I open them up in different layouts. But you can do it as what you want. There's lots of different ways of doing it. Like I say, what I'm going through now, I'm sure other people have gone through and they'll probably explain it in a different way, which is fair enough. Lots of different ways of doing it. Okay, so moving on, alerts. You can create alerts. So just as a basic alert, say you were thinking that the Japanese 225 is going to break down even further, and you think, right, this level here, which is 26003, I want to be notified when it breaks that level. So if we say somewhere there, you click on that and go add alert for JP225 USD. That will put an alert in and basically come up as a notification on the screen. And if you've got the app downloaded and you're logged in, it will also send you a notification on your smartphone as to what the alert is, which is really good, cracking bit of kit. You can set lots of different alerts. So say if you wanted to, you've got the moving average here. You go to alert and you say, right, we want to have an alert on the 200 moving average, and you want to say, right, I want to be notified when it crosses above the 200 moving average. Always click on once bar closes, once per bar close. If you click on only once, what it will do, say if you've got the next candle here goes up all the way up, touches and just literally goes above the 200 moving average, and then all of a sudden drops back down again and closes back down here, you'll get an alert for that, and it will say it's touched it, and you'll log in and go, oh, okay, yeah, we can have a look at this and potentially put a trade here or whatever you want to do. But that's irrelevant because it's been there, it's touched it, it's now gone back down again. So that signal is actually not a good signal. But if you had once per bar closes, say the price goes all the way up, touches that, and actually stays there and closes there, that's when you want a signal. Not when it shoots back down again and carries on selling. So that's how you create alerts. Okay, so action bar replay. This is an awesome bit of kit for backtesting. So say if we want to, do you know what, we thought to ourselves, how did this actually unfold? What actually happened here? What we can do is basically click replay, click to say here, and then go, right, this is what we want to do. We want to press play, and we can watch how the day unfolded or finished or started, or in this case it's days. You can go, right, this is, I mean, there's a big rejection candle there, so you're expecting it now to start buying. You can speed it up, you can slow it down, and if you want to get out of it, you can press exit and get out of it. But when you do what's it called? When you do backtesting, this is a brilliant bit of kit, because what you can do is when I do backtesting on, if I'm learning a new strategy or tweaking a existing strategy, I will go back to probably a good 3 years and backtest a good 3 years worth of data. I mean, the more you backtest, the better your results are going to be. And you can also define that by trading through different markets and different turmoils within the market. So say obviously we've got COVID at the moment. It'll be interesting when we kind of break through this and we look back at the charts and see how it actually sort of unfolded within the different lockdowns and bits and pieces. Maybe when there's, or if, I say maybe, if there is another pandemic or something that does come out, we can actually use this data to see how we traded through that market. and see who's going to be winning and who's not. And it's a very good way of working out actually what's gone on basically and what's happened. Okay, so that's bar replay. So on the right hand side up here, you've got a little box. With this box, you can change your layout. So if you click on this, what you can do, you can have multiple screens. So what I normally do when I'm trading, I do what's called top-down analysis, which basically means you start from the highest time frame and then you work down to the lowest. So I normally have 3 charts. So if you click back on here again, you can have, if you take these or add these on or take them off, it'll basically they'll all copy themselves. So each pane, so you've got 1, 2, 3 panes. At the moment, they're all the same. So if you change to hour, they'll all change to hour. But say if you wanted to have them all different, so this one's, so that on my screen, I've got this one as daily. Oh, I've got this one as 4 hour, and I've got this one as 1 hour. Okay, and I will have them all displaying the same stock or forex or whatever you're trading basically. So you can see at the moment these are all JP225 USD, which is great. So what we can do though is if we click up on here again, we can actually take symbol off, and what we can do is, say if we wanted Japanese JP225 on here, but on here we wanted something different. If we go to our watch list, you can put UK 100 on it, and say this one you wanted UK 100, oh sorry, US 200, you can put US 200 on it. So you can get multiple charts up at different times, which is great. So, and then again you can go along, you can save, and it'll, when you open up your charting software and click on chart 1, it will open up as this, which is really handy. You can have different layouts, so you've got top, bottom, over here, or you can have lots of little charts if you just want to see snapshots, which is good. Or if you just want a bare basic chart and think, do you know what, let's get the daily chart out, let's have a look and see what's happening there, and then we'll scroll down, we'll go to the 4 hour. Yeah, cool, we're still trending lower, brilliant stuff. Let's have a look at the hourly chart. Brilliant. Okay, yeah, we're under the 200, we're making lower lows, lower high, lower low, lower high, lower low. Yeah, we're all kind of trending the same way, so when we get a pullback we could probably enter this. So yeah, that's how you change your different layouts. Settings, obviously there's lots and lots of settings in here. A lot of them you don't even need to look at. They're preset settings that whoever invented Tradingview has set these up as the basic standard settings that you would need to be able to run smart charts. So if you go to chart settings, click on symbol, and the way I got onto chart settings is click that. You can also right click settings, click on symbol. If you want to change your candles, you can. If you want the red to be a little bit more red, you can. If you want the green to be a little bit more green, you can, and so on. There's a lot down here that I don't change. It's just not necessary. Status line, again, these, if you wanted to get rid of the buy and sell because you don't want to buy at market value, you want to buy a limit or stop order, then you could get rid of that if you wanted to. You could open high, low, close values is only relevant if you are on open, high, low bars. So again, it's not required. Scales obviously on the left hand side and across the bottom, you can change them, do what you want to do on that. Appearance, One thing I do is I will get rid of the lines behind, because I just don't see the point of them. You want a nice clean chart that you can see, basically. You don't want all these lines behind. The more lines on here, the more confusing it becomes. You can put session breaks on if you really want to, which will basically give you a break between each day or each trading session, which is great. Scales, you can change the color if you want, no problem. Watermark's a good one. What it does, if you untick it, it will disappear. If you tick it, it will reappear. So what this is basically you've got a watermark of what you are trading. So this is obviously the JP225 1 hour. If you changed onto a different stock, Forex or whatever, it will give you the new name. So I always keep it on, because if you don't, you have to look to that corner. And if you're new to the symbol and you're thinking, oh, I can't remember what it means, then you can come down. We know this is Japanese 225. Easy. Again, yeah, so there's not much else on here that you need to really explain it. It's stuff that's set up user friendly for you and me and everyone else to see. So yeah, I do keep the buy and sell market orders live on here. The reason why I do that is because sometimes if there is something that's moving quite quickly and I think I'm late to the table, but I'm still going to get involved, and it meets my criteria of the plan, then I will buy in and crack on, and then I'll set my take profit and stop losses once I'm in. Sometimes that happens. So on the settings for trading, obviously you can have show positions. Some people turn that off. I'm not sure I could trade in that way. I always like to see what's happening. The only thing that you can do, you can have it when you put your trades on, you can have the tick value go up and down in either money, so it goes up in say £1, £2, £3, £4, or 0.50p, 75p, so on, or you can have it in ticks. So depending on what I'm trading, so say I'm trading my own personal fund, I normally have that on money, because my own personal fund is mine. I'm looking at it. I'm monitoring it, managing it, making sure that we're where we need to be. And then I've got a couple of other funds where I put them on ticks, and I put them on ticks purely because it's kind of a psychological thing, really. And it's when there's big volume going up and down in money, it can put you off and it can make you do funny things. So say you are down £1,000 and you're sitting there thinking, oh, this is terrible. What do I do? I don't know what to do. Start sweating. You start thinking, oh, it's disaster. My whole life is ending now because I'm down £1,000. It's a terrible situation, because it's never a nice one. And I know changing it from money to tick, if you work out how many ticks it's down, times that by your value, you're going to work out what's actually there anyway. But psychologically, for me, if I can't see £1,000 down and I just see, I don't know, 25 ticks, it's a little bit easier for me to swallow, to be honest. If I do make a loss, you make a loss. It happens. It's part of the course. But what you need to do is minimise your losses. So when I say that it changes you sort of your psychological ability to be able to put money aside, it really does. So say you're £1,000 down in trading, and you think to yourself, oh, I'm going to pull out now. I'm going to pull out, and that is it. Just done. Pull out. Get out of it. Get out of it. It's not worried. But that might be all well and good, but that might be that time you pull out at that 1 hour interval might be the rotation the market needs for the pullback. And instead of you losing £1,000, you could have actually probably sold that at half that. So say you have a, I don't know, a 50 tick or 100 tick move against you. You 90% of the time you'll have a pullback. It'll pull back a little bit, and you can normally pull back and get some of your money back. So there's certain ways of actually being able to sort of hedge against your bets as well, and I'll cover a little bit more of that at a later date. But yeah, I have it on ticks for some accounts, and I have it on money for some of the other accounts as well, just depending on what I'm doing and how I'm doing it, basically. You can have reverse button on. I'd advise turning reverse button off. I have clicked that a couple of times by mistake, and that's actually cost me quite a lot of money, especially when it is a mistake. It says show executions. Yeah, show orders. I would leave all of them on. You don't need to change them. That is basically what it is. Okay, so one thing I do, I move all my charts scales to the right hand side. I just personally find them easier. So say on this chart here, you wanted to zoom into this area, you can literally grab it, push it up, grab it, pull it, and then scroll it to where you want to be. If you're sort of scrolled all the way back and you think, oh, I want to go back to the front, just come down here, press reset, and it will reset back to where it should be. Okay, so it's very straightforward being able to navigate yourself around these sort of areas. Really straightforward. I'm just going to get rid of this for a sec. Okay, so left hand side you've got drawing tools. So drawing tools, I won't go into this too much. I'll just show you the ones that I do kind of use. Obviously the cross, dot, arrow and eraser are just your fundamental ones. If you want a dot instead, then you can. If you want an arrow because you want to be able to point to stuff, great. I normally have it on cross because I'm normally trying to find a sort of precise point. Moving forwards, you've got Fibonacci retracements and you've got trend-based fib extensions. They're the two I mainly use from this section, but there is a wide range of other fib times, fib speed. I've never used any of this. Gann boxes, square fix. I mean, I've not used any of this stuff. There will be some setups of what people teach and strategies out there which probably incorporate some of this stuff, but I don't use them. I just use fib retracement and trend-based fib extension. Okay, so moving on, you've got another drawing tool. On here I normally use rectangle and rotated rectangle. Rectangle, you'll hear me when I talk about support and resistance in some of the videos. You'll hear me talk about support and resistance zones. So when I say a zone, to me that is a zone. That is a zone because market has pushed down, pushed down, pushed down. It's come up, pushed down, come up. It's made a lower high, lower low. It's made a higher high. So at this point, you would, because you are in a bearish trend move, you would actually look to see where the last sticking point was. And this here is an area of interest for me because of all the consolidation range movement you've had here. So to me, this is a sticking point that we need to look at and go, right, well, there's a chance obviously we're going to break through and you'll see a good break. There's a chance we're going to get a false break or a bull trap and then sell off again. Or there's a good chance that price is going to come up and go, do you know what? We've tested. We're in this zone. We're going to come up. We're probably going to get a bit of consolidation, which we have. When you start understanding candlesticks and their functions and the different types of them, you'll understand that that one and that one, they are two. One's an indecisive candle, one's a reversal candle. So again, if you were looking at this at that time, you could have shorted and then ridden the wave back down again. So yeah, it's good. And then say if you were using, here we go, so rotate your candle, sorry, rectangle, I would use that. I'm just going to get rid of that actually. Let's just get rid of that. So, tell you what, let's start again. Let's grab that one and go from there to there, like that. So again, this is, to me, this is basically a trend line. I use rotated rectangles to create trend lines. So there's a big difference between trend lines and support and resistance. Support and resistance, if you go to here and you go to horizontal line, this here to me would be support, because you've had one touch of the line, two touch of the line, three touch of the line, four touch of the line, five touch, six touch, seven touch, eight touch, nine touch, almost a 10 touch. So again, that to me is an area of interest where there's been multiple times where market has tested this area of 26890.5, and it's not liked it, and it's done what it needs to do. So again, with rotated rectangles, it gives me a area of resistance. So again, two touches. We like to work on two, if not more. You only need two touches to create a trend line or a support and resistance. Obviously, the more touches you have, the stronger that will be for you. So yeah, I think these are really good, cracking bit of kit that we can use. So in here you can have text. If you want text, you can write, do what you want to do, cancel, change backgrounds, all that sort of stuff. I use text a lot, especially when I'm back testing. Within these as well, you've got a load more. What I do tend to use is I use arrows quite a bit, and so say on here I'll put arrows just to remind me that we've got a load of support in an area, basically. Sometimes, and you'll see from some of the videos of me actually trading, you'll see that on my screens there's a lot of stuff, a lot of lines, a lot of bits and pieces, and sometimes you just want the fundamental bits to look at you and to scream at you and go, right, come on, look, price has tested this 1, 2, 3, 4, 5, 6, 7, 8, 8 or 9, 10 times. You know, you need to be aware of this. Apart from having a neon sign, you know, that's what we need. We need to be able to know where we could be going wrong. I mean, heaven forbid, if you shorted, say on this candle here, I mean, crikey, you've got to sit in all of this. You've got to sit in all of this until it finally breaks. That could have taken another 2 days to break. Whereas by then you probably got fed up with it, cancelled it out and lost money. So yeah, rotated rectangles, normal rectangles, I use them for trend analysis. For support and resistance, I also use the horizontal line as well as the normal rectangle. And I'm going to do a video on support and resistance, because I think it's very important to understand support and resistance. I think it's a fundamental part of, should be a fundamental part of anybody's trading plan. Okay, so moving on, we've got patterns. I would, before you start messing around with these, you need to understand what they are, what Elliott wave actually is, what a head and shoulders pattern actually entails. An ABCD pattern, it's great being able to draw an ABCD pattern, but what does an ABCD pattern actually mean, and what's going to happen once a completion of an ABCD pattern has happened? You know, so that's where you find them anyway. Next one down, the only ones I use on here is short and long position. So what I do, so say if we're here and we think, right, market's actually going to come up, we want to set our, this is our long position, so we want to set our stop loss below the last low, and we want to shoot again to test the re-heights. We're looking at there a 2.83 risk to reward. We're risking what we're risking what we're risking. Oh, I see. It's done it slightly different. Yeah, so basically you 2.83, so nearly 3 to 1, basically. So again, you can drag them, change them, and you can use that to basically trade like demo trading as such. You can predict the market, and the more you actually practice predicting, mapping out, you're not predicting because there's nothing to predict, you're mapping out basically what you think is going to happen. So in this instance, I couldn't trade this anyway. I'd need to do a little bit more time on seeing where we've come from and what we're doing first. But you can use this to basically be able to give you an idea of what you've done. So say you put this here now and then you come back tonight, you'll actually see that the market's probably gone up, up, up. It may well come up and retest the high. Often that happens, but we are below this support line, which I suppose now it will act as its own support and resistance line, and it could be using that to bounce down south. But like I said earlier, before you place any trades, you need to do what is called a top-down analysis and make sure that you've checked the higher time frames. Make sure you're all on the same wavelength as such. Okay, so moving on then. Over on the right hand side, you've got camera. So on the camera, basically you can take a snapshot of what you are looking at now. So if you click that and you go to save chart, it will save it into a file for you. Or if you go click the link to the chart or copy chart image, click on that, it will take a picture of this screen, and then basically you can copy that, paste it, send it to somebody, do what you want to do with it basically, which is great idea to have. Okay, so moving on then, what you can do in this area here to get this up, if you click on this right hand side, that's it, obviously minimized, click on there, that will maximize it. This is your watch list. So within your watch lists, you can create your own watch list. If you go to create new list and call that, I don't know, list 1, save, it will give you a brand new list. And then if you want to add items to your list, click on add. If you just want forex pairs, click on forex pairs. If you think, right, I want to look at Australian dollar against the Japanese yen, US dollar against the CAD, Australian dollar against USD, and euro against the dollar, you can put all them in. If you want to change, not brokerage, but I can't remember what they're called. If you want to change like the charts, the price supplier, you can. The source of supply, click on that, and then you can put in whoever you want. But there's lots of different ones to choose from, and they'll all give you slightly different numbers. So just be careful. I normally just stick to Owanda because it's one of the most common ones to use. So yeah, what you can do is I've set up different watch lists for different trades that I do basically. So I've got a futures account. I only trade 3 futures, so I don't need to be looking at 20 different forex pairs as well as the futures. I just want to look at futures. If I just want the majors, I'll have a look at the majors. My majors and minors are in together. I keep changing this round. I think I get bored and then go, right, I'll have a little change. So within this as well, what you can do is I tend to do like a red, amber, green scenario with the watch list. So basically, say we're looking at euro against the dollar, and we think, do you know what? I'm not overly excited by this at the moment. I don't really know what's going to happen, and I'm not really interested in trading it. I'll put that as a red. If we think, okay, Australian dollar against the US dollar, we think, do you know what? This is looking like it's going to be a buy. I'm going to track this, and I'm going to monitor it and see what's happening later on today. We'll put that as a amber. So if we go to Australian dollar against Japanese yen, and we think, right, we're going to buy this. We're in a good position. It meets my plan. This is what we're going to do. Right, buy, entry, at market. If we go. Oh, hello. Come on. That is a green. So then you might have 5 different pairs you are trading at once, and you might have 2 different indexes you're trading at once. What you don't want to be doing is trying to look and find the ones that you're looking at that precise time, because it creates more stress to you. You don't need that. You want to just go, right, euro against the dollar, I'm not interested in that, I'll look at that again tomorrow. Australian dollar against US dollar, right, let's just see if it's right. It's still not where we think it is. It's got a long way to actually pull back and come back up, retest, and then go again. Let's just monitor it, put it in the monitor list. Fine, so we've got AUD Japanese yen, right, we're still in the position. Yeah, great. We just got to adjust the stop losses or adjust the trade profit. Off we go. It's just a good way of, for me, of just organising it basically. Because if you think you've got, so say in here the majors, you've got all of this. And this isn't all of it. I've got rid of some of the pairs because some of them I've not been actively trading and I've not kept up with them. And I don't need to at the moment. If I do, I'll start the process again with them. Okay, so on the right hand side, if you click that, it will minimize it, giving you more chart screen, which is great. Underneath, you've got alerts. If you click on alerts, you'll have your alerts up here of what they are. So if you click on here, that'll tell you what the actual alert is. Down here, this is an alert log, and this will tell you the times that the last, like this one, 8:45. I had an alert on the MESH S&P 500 on the 5-minute chart. And this is telling me that we had an alert on the tick reading hit between 800 and 1000, which is, I've set that up so it alerts me when it hits 800 to 1000, because that's one part of the puzzle for me trading S&P 500 futures. So yeah, awesome, great bit of kit. Notifications go on your phone, notifications pop up. You can have them so they repeat themselves. If you're busy and you think, right, I need them to repeat because I'm not in front of it, then great, you can do that as well. So just running down the right hand side, very briefly, you've got news, lots of news. It'll just keep, every day it will just keep populating. And oh no, you can open it up and then it'll give you a little bit more information. I personally don't trade on the news data, and I don't do that because I find that the news is always happened. It's always too late. And my trading plan actually tells me to not trade when there's high impact news. And that's really from previous experience. I've traded a lot through high impact news, and you think, do you know what, I'm gonna trade this because we're gonna basically trade a break of one direction, and you trade it and you get into a massive whipsaw of chasing money basically, and normally it's money that you ain't got in there, which is not good. That's not a very good way of trading. That's a good way of blowing your account very quickly. So I tend to stick out the news. There's 24 hours in a day. There's so many different forex pairs to trade. There's so many indexes. There's so many stocks. You don't need to worry about missing one of them, because there's certainly a lot more. I'll do a little bit of coverage on psychology and FOMO. So FOMO is it's a really it's a real fundamental part of trading, and it's called FOMO, which is fear of missing out. And basically, what I've been in the FOMO stage quite a lot in previous, and you'll be sitting there and you'll be thinking, "Wow, everyone else is buying. Let's buy. I can't just sit here. I don't want to miss out on this. This is what's going to happen. Everyone else is buying it. Let's just crack on." And then actually, what you don't realise is they're probably already buying it, but the sale's already starting to happen, and you'll buy it. Then all of a sudden, it'll go against you, and then you've feared that you've missed out, but then you've just lost money. So, which is silly. What you need to do is take a calm, steady approach to the markets, um, and analyze it and trade off a plan. If you do not trade a plan, you plan to fail. And I know that's a bit of a cheesy line, but unfortunately that is true. If you're just shooting from the hip, firing all over the place, yeah, you might get a few pence out of it, but you'll probably lose a lot more than what you would following a consistent approach to the market, basically. Because don't forget, you are trading basically against banks, hedge funds, institutions. You're trading against algorithm. Sorry, I don't get my mouth. You're trading against algorithms in computers where there's people not actually at the screens. The computers are basically trading themselves. So, when you actually look at all of that, to be able to trade, they've got a sequence that they look for before they place a trade. And for us to be able to make money, we've got to do the exact same thing. We need to be able to have a precise indication of how we interpret the markets, and that's by doing what we're doing now, which is called technical analysis, and then have a plan of how we actually trade that situation. So, going down the line, you've got data window. If you hover over this one, this will tell you a little bit about it. This tells you that it opened at 0.71574. It closed at 71239. The high of the day was 71815, and the low of the day was 71141. Tells you the change, tells you what your MA was and your volume and all that stuff. 5161K on the volume. It's quite a bit for that. Quite a bit. You can see the volume at the bottom when you open up Tradingview. Before you start setting up all your analysis, work out whether you want to use volume. If you don't want to use volume, you can double click on it, delete it, right click it, delete it, or press delete on the keyboard, it'll delete it. So yeah, I do trade with volume, but I don't trade with this volume. I trade with a different type of volume, but I'll show you that in future videos. Okay, so what we're on now, hot lists. This gives you changes of the different US exchanges, basically. Percentage gains, last changes, and yeah, you can have a good look at this. There's a lot involved with it. I personally don't use it because I don't need to. Calendar. This gives you news releases, when news is coming up, news that's already come out. Again, have a look through. You can get used to try and find the news if you want to trade on the news. I personally don't. At the bottom of the screen, you've also got news as well. So say you are trading on a daily and you think, right, we're on the Australian dollar against the US dollar, but tomorrow's candle, there is going to be two news come out. So what is the news? Mitch sentiment final, core PCE price index, So what you would need to do is understand how these actually affect the market. News is great. I mean, I've traded through all sorts of news before, and you think, "Cool, it's really going to do something because of that bit of news," and it's done nothing. Or you think, "No, that ain't going to affect it. There's nothing. It's not even a direct link," and then it's gone massive. Everyone's buying or everyone's dumping. You need to understand what a core PCE price index. What is it? What's it about? So you just put it in, copy it, put it in Google. It'll come up and it'll give you an indication as to what that actually is. Basically, I'm not interested in all of this. There's two big newses I normally look at. It's normally to do with options expiring for the SPY, and it's normally to do with the Fed or FOMC. That's kind of what I follow. There's statements and bits of news that I read, which is mainly from sort of banks and hedge funds, to be fair. But I don't necessarily look at this and follow the news like this. I find that most of the time you're best off sticking out of it, not trading. It tells you the time when the news is released. If it's real big news, you'll see people. You'll see orders coming in on the order flow. Where's the order flow? There it is. Crikey, missed that one. Right, so this is the order flow, and when the market is actually live, you'll see numbers going in here and going in here, and again, it's quite involved with the order flow. And if you want to see some videos on it, I'll drop some links into the comments box. But basically, you just, for now, for somebody who is starting out learning to trade, I would advise not trading through the news. I would advise trade up to the day before the news. If there is some real big news coming out the next day and it's of high importance, I would stick out of it, because if you don't know what you're doing, you're best off not doing it. And if you're just going to jump on the bandwagon with everybody else, there's a good chance they don't know what they're doing either. And when I say they don't know what they're doing, what I mean by that is, you line up 10 different traders, they've probably got 10 different approaches. So unless you're all following the same approach, then it's a little bit difficult to say we all know what we're doing. If you have 10 traders and you've got 5 buying and 5 selling, then it's going to be all over the place. So yeah, that is where we're at. So basically, you've got next tab down, you've got ideas. I posted these years ago, I think 2019. Yeah, 2019. And basically, what you can do, if you take a picture up here, take a snapshot, save it, put it into idea stream. Basically, you can put your ideas out there and share them with people, which is good. You've got a chat, so you can join different chat channels. If you're interested in sort of cryptos, great. You're interested in Tesla, DAX, Forex, there's different channels that you can get involved with and read and interact with, which is great. You've got what's this one? This is called private chat. So basically, if there's you and some other people that you know that's on Tradingview, and you think, right, let's put them in the chat so we can actually bounce ideas off and all that sort of stuff. If you go onto here, click on that, you can actually put in their Tradingview username and find them and add them to a chat, so you can make your own little chat group, basically. That's pretty cool. Streams, people do like live streams and video streams of their chart analysis, and again, you can post them into here, which is cool. What you got here? Notifications. Don't know. Never had any notifications. Don't know anything about that. Order panel I just showed you. Oh no, I didn't. Sorry. Order panel. Basically, on here, what you can do is you can place an order via this method. But what I'll do, let's just finish this off first, and then we'll look at placing some trades just as a temporary. So the one at the bottom is object tree. This is where all of your indicators will be. So say if you've got, I don't know, 16, 17 different indicators, you will have 16, 17 different indicators all down here. And it's a bit much to look at. So basically, if you click that, it will just disappear them all. But if you want to find one and go, right, I just want you to amend something, you can find it in here and go, right, do you know what, I need to amend that. I don't want that an 8, I want that as a 50. I want it in, I don't know, red, and there we go, done. So yeah, you can do it exactly like that. Okay, so right, so what we will do now then, so to get rid of these, the best thing you can do is click and click, and that'll get you back to a normal chart, normal layout. So say now then, we want to buy at market Australian dollar against the USD. What you can do is you can come up here and go, right, I want to buy 6,000 of these. So then if you press buy now, that will buy it at market value. So you are in the trade now. Okay. It's 11 o'clock now, so there'll be a bit happening. Okay, so that's basically, if you wanted to do that and go straight into a live market, place a trade, market value, that's how you do it. So say now you want to put the support, a stop loss and a take profit on this chart to give yourself a little bit of security, which I'd always advise you doing. If you double click on the little 600 and go take profit and stop loss, that will automatically set you defaults. Okay, so if you set the defaults, press modify, the support, stop loss and take profit will appear. What you can do is you can grab them and you can drag them. So if I was trading this and this for some reason got me into this trade, I'd put my stop loss a couple of pips below the low, and I'd be looking at a retest of the top of the candle, previous candle basically. But it depends on what your trading plan is. I mean, you've got to look at that first before you. In some of my trading, my stop loss is 12 to 15 pips, ticks. Sorry, 12 to 15 ticks. Stop loss, and I'm looking at a 25 to 50 take profit. So whereas when I'm trading on a 4-hour chart on the Forex pairs, I will be trading probably, it depends on what it is I'm trading or how I'm doing it, but normally it'll be a 30 to 40 tick stop, and you'll be looking at a 2 to 1 risk to reward. Or depending on what I'm doing, it might also be I'll tell you what, actually, just while I think about this, earlier I said about you can have it in pips or money. We want it in money, then you can change it back to money, and that will actually put it in US dollars. So every time this tick moves up, it will go up, and you will see the increments starting to change. So that's actually going up and down by 6p of US dollars, or whatever that is in dollars. So yeah, I hope that kind of gives you a little bit of value, just going through the trading view and showing you the basics of what and how, and you might be sitting there thinking, right, tomorrow I'm going to set up a chart. I'm going to start having a look through and see if I can start my journey. Thank you very much for listening. like I said, I'm going to do some videos next on support and resistance, because I think support and resistance is one of the fundamental tools you need in your toolkit of trading, basically. So that'll be my next one, and then I'll be looking at Fibonacci, obviously candlestick patterns, trend lines, moving averages, MACD. There's going to be a whole host of bits and pieces. So, like I say, hopefully that wasn't too dull. The whole point of that, it's hard to make these kind of fun and upbeat, but it's just a walkthrough of what and how and where to click, and sort of hopefully if you're going through and you can take something away from this, then fantastic. If you get stuck and you think I'd really like to see a video on setting up something, put a comment in the comments box, and I will take a look at it and I will do another video for you. But on that note, have a very good evening, and I will see you on the next video. Take care.